Welcome to the April update for the Alexander Credit Opportunity Fund. For the month of April, the fund returned 38 basis points, which resulted in an annual return of around 5.5%. We're going to go into those returns. Today we're also going to talk about the running yield and the yield to maturity of the fund and why it's been increasing over the last 4 or 5 months. But firstly, let's have a look at those returns. So 38 basis points for the month was an outperformance of the benchmark by around 5 basis points. The annual return of 5.46 is 1.66% above the benchmark. And over the last 3 years, we've produced 6.67% per annum, which on a per annum basis is 2.65% above the benchmark. From the graph of the monthly returns over the last 2 years, we can see that the April results were consistent with previous monthly returns. Now let's have a look at some of the risk metrics of the fund. In terms of our risky credit DV01, we're currently sitting at around $88,000 a basis point. This is well below the fund limit of around $181,000 a basis point. Our credit duration, this is before we apply the hedges, is around 2 years. With the hedges, that credit duration becomes effectively zero. The interest rate duration of the fund is 0.17 years, and that's been consistently low since the inception of the fund. In terms of credit duration, you can see that our credit duration, again, this is before we overlay the hedges, is around 2 years, and we expect that to drift down over the next couple of months. Even if we remove the hedges from the portfolio, a credit duration of 2 years is considered fairly conservative in its own right. And as I said before, with the hedges in place, the credit duration of the portfolio falls to close to zero. In terms of the portfolio breakdown, it has been consistent over the last couple of months. RMBS has remained at around 54%, followed by ABS, corporate bonds and loans, CMBS at 7% and listed securities at 7%, followed by cash and then finally the hedges. As I mentioned last month, we are looking for the corporate bonds and loans allocation to increase over the next couple of months, although that is deal dependent. And that's likely to see a fall or drop in the RMBS allocation. Our current allocation to investment grade credit sits at 46%. Our allocation to non-investment grade is therefore 54%. We would expect the allocation to non-investment grade credit to drop below the 50% mark within the next 4 to 6 weeks. The size of the fund is currently sitting at 180 mil, and the running yield before fees, which we report on a monthly basis, is currently 7.29%. Investors may have noticed that this running yield has increased over the last 4 or 5 months. This has been a function of 2 things. Firstly, the fund has invested in a greater amount of non-investment grade assets, and with those assets comes naturally a higher yield. The second thing is that the base rate in which over which we invest, BBSW, has increased. I'm going to show you a graph of how that's increased over the last 4 or 5 months. You can see that the fund invests in floating rate notes, and that means that every month or every couple of months the coupon of those notes get adjusted. In terms of the fund, most of the floating rate notes are 1 month BBSW, which means that's getting adjusted every month. The 1 month BBSW base rate back in November of last year was close to 1.6%. This base rate, however, has increased and currently sits just below 1.9%. The reason for the increase has been described by the RBA as a fallout from the US government bidding up the price of US LIBOR over the last 4 or 5 months. And what this means for the fund is that we should be seeing slightly higher returns over the next couple of months as the assets that we currently have reset their coupons based on this higher rate. This impacts the current running yield of the fund, which is what it's producing here and now. It also impacts the yield to maturity, which is the yield that we're likely to achieve if we held every one of the assets within the portfolio until it matured. So thanks for joining us for the April update for the Alexander Credit Opportunity Fund. 38 basis points for the month of April was a reasonable outcome, and we'd expect there to be strong results for the final 2 months of this financial year. Thanks again, and I look forward to presenting to you in a month's time.